Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Thursday, the 12th of December, 2019, and we're just getting on to 3 p.m. Central Daylight Time. An update, a solid one in the grain markets, and this is because word has come out, you can see that word, what it's done in the stock market, that the U.S. and China have agreed in principle, I use the word in principle, not signed yet, in principle to a phase one deal, not just an extension of the tariffs, but an actual phase one deal. Now, I was on Bloomberg this morning, Fox yesterday TV talking about this, and at a minimum, I have continued to expect no less than we would not put on more tariffs. Seeing a phase one deal, well, I'm pleasantly surprised. However, after the announcement, the market starts to work that in, and you've always got to take notice of it. So let's take a look at what we're doing in the grain market and get a feel for it. First off, the market, if you take a look on the settlements, we're up for the week on a closing basis, 8 3/4 cents. We're certainly pivoting around this 18-week average of closes at the 8.94 level. When we take a look at the chart here, we can see that we made a stab down, and on the news, we had a big move back to the upside. We got as low as 9.02, came back as high as 9.16, and that's a double top with yesterday. Yesterday's high was also 9.16. In terms of the swing line, this is a chart without the swing line. Put the swing line on, and you can see you've got a pattern, and I've shown you the most recent arrows of lower highs, and certainly lower lows. You can see those. What negates the downtrend? Taking out the 9.17 3/4 area. That would then give you a pattern, at this point at least, of higher lows, higher highs. So the bears are defending themselves. That's why the market probably didn't go up much higher than that. Where did the market find support? Well, if we take a look, the market had been in a rally, a short covering rally, had come down, and I know one of the things I've been saying is I suspect we've seen our harvest lows. I'll stick with what I know best. That's what I still think. As we are here on Tuesday, yesterday the market breaks down, hits the 18-day average, finds its early legs there. Market exceeds that last night and gets the pop back up today. Where's the resistance? Right here at the 100-day average at 9.19 3/4. And again, to get there, you've got to get through this 9.17, negating the downtrend. What about if you rally more? Well, if you were to rally even more, wherever this other Bollinger Band comes in would be my secondary resistance point. Now, that band is falling on average, if we look at it, in the neighborhood of about 3 cents a day, 2 cents a day, 9.36, 9.32, 9.29, 2 to 3 cents a day is what it's doing. So I wouldn't be surprised tomorrow if it's in the let's say it's in the 9.25, 9.26 area. What I guess I'm really saying is even if you take this out, you've got some serious levels of resistance, and the market with the current rally has already gotten itself overbought. Would I look for a massive move on it? The chart is saying no. The chart is saying you got a lot of resistance right there. However, none of us know what's in this phase one deal. So it's like going through a major report, and that's something I rarely recommend doing. Right now, the trend is down, the bears still have control. Meal's the same thing. Lower highs, lower lows. Market is still looking lower. Resistance has been and continues to be the 18-day average of closes. You'd have to get all the way over 306.70 to negate the downtrend. Haven't done that yet. And the powerhouse of the market, in fact, I had a meeting this morning with our grain department, and they were telling me they look for soybean oil to just be continual, well supported, moving higher. And it's because China, when they lost their hog population, one of the byproducts, they would get soybeans, they crush it, and they'd have that bean for domestic usage in the soy oil market. Well, with the smaller amount of hogs, they're not crushing as much. At least this is the explanation given to me, and that they're aggressive on the world market buying soy oil or buying beans to crush for the soy oil because that demand doesn't go away. People use this in a lot of different products. Trend up, higher lows, higher highs. I'm giving you the explanation given to me. In looking at the corn market, I questioned yesterday the first challenge of the lower Bollinger Band into oversold, and I also made a statement. I said that it's not unusual that you get there, get oversold, and if you're going to embed or lock in a downtrend, the first step is getting oversold. This rally back says, no, the market's not ready to do that. In fact, you rallied back over the 378 and a quarter area, which tells me that the market right here, no man's land. You've got a market with now a higher high, a lower low, caught in the sideways action with no follow through. In the wheat market, today was a pretty big day. Here's what you call a trap. You have an outside day up. When you take out the low of an outside day, what I said yesterday, I'll repeat today to give you my understanding of how I teach on this. That puts into play the closest of the lower Bollinger Band or the 100-day average, since that's the closest downside moving average of importance in the Bollinger Band. What would throw you off on this is getting back over the high of that outside day, and that's what the market did today. So a pretty wild trading affair that you're getting. You don't see outside days, number one, that close to each other, and you've got the higher high and lower low pattern. In the sugar market, it just continues bullish. This market's just locked in on that upper Bollinger Band, and until you lose that pattern, which is when both the numbers, the K and the D line that make up the slow stochastic, are over 80 going sideways, which they've been, I'm looking for the pros to step in on each break and try to buy the market, driving it higher. That's at work right here. It's at work in the coffee market. You can see how it's running away with the embedded reading. And in the cocoa market, you have nothing. You've got a higher high, lower low. You traveled down to the lower Bollinger Band. You found your support today. That's not a buy signal. It's a sign that's where I think the shorts are taking money off the table. Now, if the market wants to continue lower because it's got downside bias, okay, then the 100-day average becomes another support. What about resistance? Back at the 18-day average is where I'd look for that. In the cotton market, cotton's one of those markets that with the U.S.-Chinese phase one of a deal probably gets bid on that. You get the bond market falling, get the stock market going up. I can go on and on what that would mean. But we don't know what makes up the phase one. Our guess is improved trade, taking off some tariffs, demand for cotton shows up. Higher lows, higher highs, but you got to the upper Bollinger Band. Got to watch that. Overall, it's been a broadened sideways action market. Cattle market. Cattle market's got to get over right here, this past high, in order to negate the downtrend. That's 125.80. Hasn't done it. Where are we fighting? If you can't see it, I don't know how to help you because you're fighting at that 18-day average and just sort of stuck there in this sideways action. As I've said before, the seasonals are powerful to the upside going forward for the near term. So I'd be looking at that. Feeder cattle needs to take out 143.27 in order to negate its downtrend. It's already used up a lot of power. It's in overbought territory. And in the hog market, well, an update today should be on news that you're getting maybe some resolution out of U.S.-Chinese trade talks, but still hanging around that 18-day average. And it's not trending. You got a higher high and lower low. I see a market that's just fighting a battle here, wearing people out. So you put it all together, you try to come up with game plans. That's what I'm doing. Now, I want to remind you, our Cyber Week sale ends Sunday. So you're not going to see this offer from us again. Let's assume you want to get involved in our research, one of our research projects. In other words, we have 3 different levels of research. We have one level that gives you my written updates, my written commentary, oral updates, and my morning subscriber video. I have another level of research that is just the written update. No oral commentary if you want it, no written trade recommendations, no access to the morning subscriber video, and then we have the morning subscriber video by itself. Any one you choose between now and Friday to take on a 1-year basis, I'm putting in my charting course, $179.95 value. Want to get that? This is the way to do it. In one case, like the videos, the whole thing's $156 for the year. So you're getting $179.95 value for the $156, plus you're getting that access in the morning. How do you find out more? Go to our website under the word research. tells you the different programs. If you want to see the charting course, just go under education. In the meantime, I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.